A'udzubillahi minasyaitonirrajim. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. InsyaAllah today I want to talk about IIE Corporation Berhad. So my name is Muhammad Iqbal Izzuddin bin Rahman and my matric card number is 17203836/1. So first we go to the company. The founder is Tan Sri Datuk Lee Shin Cheng, and IIE Corporation Berhad is a leading global integrated and sustainable palm oil player. And they are just listed on the main market of Bursa Malaysia Berhad and trading as MYX 1961. Their palm oil business consists of upstream plantation in both Malaysia and Indonesia, and downstream resource-based manufacturing business. With hand-on management approach and excellent agronomic practices, they are ranked highly as one of the most efficient major plantation owners to produce one of the highest oil yields in the industry. So we go to the financial ratios. First, we go to the liquidity ratios, and the current ratio in 2018, the current ratio of this company is at 2.93 times. The current ratio show in 2018 is above 2, so it means that this company can pay all their short-term obligation, and that because they have more current asset than current liabilities. After that, the current ratio increased in 2019, which is 3.92. But in 2020, the graph decreased compared to the previous year at 2.66 times. After that, we go to the quick ratio. The quick ratio shows in 2018, this company has 2.39 times of quick ratio. It means they have a good liquidity where they can pay all their short-term debt and liabilities with their almost liquid assets, exclude inventories. After that, the quick ratio of IIE Corporation Berhad increased from 2.39 to 3.28 times in 2019, while in 2020, they have decreased to 2.11 times of quick ratio. After that, we go to the asset management. Their inventory turnover ratio was we can see that IIE Corporation Berhad is unstable from 2018 to 2020. In 2018, they got 7.82 times in inventory turnover ratio and increased to 9.49 times at 2019. But in 2020, the graph has decreased to 7.79. So that we go to the day sale outstanding. The graph show that in 2018, IIE Corporation Berhad take 40 days to collect a payment on every sale from the customer. Thus, in 2019, they just take 38 days to collect the payment. This means that this company have tightened the condition with respect to the debt repayment period. In 2020, the time period of payment is same as 2019, that is 38 days. After that, we go to the fixed asset turnover ratio. The graph shows that in 2018, the ratio was 0.88 times and decreased to 0.87 in 2019. This means that in 2019, it showed that the company is less efficient in leveraging fixed asset to increase the company's sales compared to during 2018. However, in 2020, the company has managed to increase the ratio to 0.91 times. After that, we go to the total asset turnover ratio. The total asset turnover ratios for this company, we can conclude the total asset turnover ratio are increasing from 2018 to 2020. This show that this company do fully utilize all of their assets in increasing sales. For example, in 2018, the total asset turnover ratio was at 0.44 times and increased to 0.45 times in 2019, and at 2020 it still descending to ascending to 0.47 times, although it just a little, but it shows the good effort of management in using asset to increase the company income. After that, we go to debt management ratio. First, we go to the debt ratio. The debt ratio shows at 2018, this company debt ratio is on 43.76%. Then there is a decrease in debt ratio in 2019. It's about 42.36%. After that, in 2020, there is a little increase in the debt ratio of this company, which is 42.79%. This trend indicate a low risk the company as the decreasing in debt consistently in 3 years. If this trend continuously decrease 2 years ahead, then it is not possible to creditors will lend more money to this company. After that, we go to the time interest earn ratio. So in 2018, this company can pay 10.77 times their debt obligation based on their current income and decrease to 10.54 times in 2019. But in 2020, the graph showed the highest that is 11.02 times increase from 2019, that is 10.44 times. After that, we go to profitability ratios. First, we go to the operating margin. In 2018, the operating margin of this company is 18.61%. Then it decreased to 14.57% in 2019, and in 2020 it is increased back to 14.58%. This shows that the company is in effort to make enough money from its ongoing operation to pay for its variable costs as well as its fixed costs. After that, we go to the gross profit margin. At 2018, the profit margin is to 23.50%. Then in 2019, it descending to 15.98%. By the way, it grew again in 2020 to 21.40%. Based on the data above, we can conclude that this company's gross profit margin was in recovery condition from 2019 to 2020. After that, we go to the profit margin of this company. In 2018, the ratio is at 21.49%. The ratio slightly decreased in 2019, which is 14.08%. In 2020, it is increased a little to 14.17%. After that, we go to return on total asset. In 2018, total asset return for this company is 9.52%. Then the graph decreased and became to 6.30% in 2019. In 2020, the graph once showed an increase in the ratio, which is an increase from 6.30% in 2019 to 6.60% in 2020. This indicates efficiency in the management of this company to put an effort to the company to get the company back on track. After that, we go to the basic earning power ratio. This company show in 2018 basic earning power ratio of this company is at 8.25%, while in 2019 it goes down to 6.53%. In the following years, there was a good increase in the basic earning power ratio to 6.80%. After that, we go to the return on common equity. Based on the graph above, 2018 is the highest return on equity for this company with a percentage of 16.66% compared to 2019 and 2020, which is 10.94% and 11.74%. But it's still an increase from 2019 to 2020. After that, we go to the market value ratios. So the earning per share of this company 2018 was 0.48 cent. Then in 2019, its share of the company stock had decreased to 0.10, 0.105 ringgit. By the way, in 2020, however, the return earned by investor and on each share increased to 0.106 ringgit. After that, we go to the book value per share. In 2018, this company book value per share is 1.49. Then in 2019, the graph is going up ratio 1.51, but there was an increase in 2020 where it ascending to 1.53. So the last we go to the market per book ratio, which is in 2018 this company market per book ratio is 3.05 times. Then in 2019 the graph is going down to 2.92 times. Then in the next year, that volume is going down, which is 2.78 times. So the conclusion is for liquidity ratio, IIE Corporation Berhad show the company is in recovery conditions. This indicates that they have ascending current liabilities from 2019 until 2020. In asset management ratio, it shows good management of its asset in maximize net profit of company. While in debt management ratio, the performance is stable, which is it can handle their debt because their current income and debt getting just a little bit up and down. Performance of company in making profit was in recovery condition because of the company is on the line to get back, while the company market value is in a good condition, which is the company still get many shareholder for year 2020. Company free cash flow also increase and it can make the shareholder more attracted to the company. So this company is a good company because this company is already showing a very good performance in 2018 but decline in 2019 due to economic crisis caused by COVID-19. However, in 2020, this company showed improvement, which marks this company in recovery process, and it's a very good time for investors to invest in this company because if the company recovers, then the investor will get higher profit than before. So that's all from me. Thank you. Assalamualaikum warahmatullahi wabarakatuh.